You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? This is Mike from The Moose and the Loose. I hope you're doing well today. Today I have a little story for you guys. I keep talking about my favorite stocks, and even my children knows about them, which is kind of funny. And the other day, my son Caleb was like, "Yeah, Dad, is Alimentation Couche-Tard the world largest convenience store?" And I'm like, no, unfortunately, it's not. It is really big, but it's the second largest. The largest one is actually 7-Eleven, a Japanese company. Kind of crazy, right? Who would have thought? But yeah, Seven Holdings and I, which is the Japan company, owns over 85,000 convenience stores across the world. A lot of them are in the US. They have a market capitalization around 38 billion right now. So smaller market cap than Alimentation Couche-Tard, which is kind of interesting. And here's the news, and here's the reason why I'm talking about it today is Couche-Tard decided to, either become Circle 11 or 7 Circles, or anyways, they want to acquire, most likely going to be a merger between Alimentation Couche-Tard and 7-Eleven. So 7-Eleven made the news. They said, yeah, we received that takeover offer to buy all our shares, and then the stock price rose by 22%. 7-Eleven stock price rose by 22% on Monday, yesterday. And then I got tagged. I just finished my morning run and I'm like, what's going on here? And yeah, so I was super excited to see that news. But then, over the hype, you also have to take a real look at what's going on here and would it make sense or anything. So as long as would it make sense or not, it's really hard for me to tell you this at this moment because we're just at the beginning of the discussion. So those are just the first steps. So if you're asking me, do you think it's going to be a good thing? It would be you just come back from your first date with a girl and you ask me, do you think that we're going to make great children? I'm like, dude, one step at a time, right? Maybe you want to go on a second date and maybe you want to live with her a little bit before you get married and have children, right? So you just have to be careful here. We're just at the beginning. And remember the fiasco with Carrefour a few years ago in 2021, where Couche-Tard has reached an agreement, but then the president of France just said, yeah, no way, Jose, you're not going to buy our Fleuron, where is one of their most important company in France. So I don't know what's going to happen there, but I just thought of talking about a little bit more about the business model and if it would make sense for Couche-Tard. So first, Couche-Tard has this incredible expertise of making the right acquisition at the right price at the right time pretty much every single time. They are rarely wrong, and this is why my full confidence is within the same management that orchestrated all the other mergers and acquisition. However, this one is definitely the largest by far. After the news, the market cap of 7-Eleven was up to 38 billion, while Alimentation Couche-Tard is at 58 USD. So, yes, it's bigger, but not by that much. And it's kind of interesting because 7-Eleven has the most convenience stores. We're talking about 85,000. And then Couche-Tard is close to 17,000. So you can see that the business model already is different here. So there are a lot of smaller convenience stores for 7-Eleven. Versus the one with Couche-Tard, which mostly focus on having also a lot of gas station attached to the convenience store, which is not the case for 7-Eleven. So some of them, yes, but it's not exactly the same business model. So the total sales in 2023 for 7-Eleven was close to $77 billion. So kind of funny, 77, but yeah. And for Couche-Tard, it was 95. So with a lot less stores, they generate a lot more revenues, like big time. Like the revenue per stores in Couche-Tard versus the one for 7-Eleven is not even comparable. So again, there will be a lot of digging here in terms of the business model to see how it would be a great fit. My guess is they can put some magical Circle K powder over some of those 7-Elevens and make them more profitable and boost their sales. But how it's going to blend in, I mean, we're now going to talk about a convenience store company that will run roughly like 100,000 convenience stores. So from 17,000 to 100,000, there's definitely an integration risk big time. The other thing that struck me when I was looking at the numbers was the net income. So net income in 23 for Couche-Tard was 4 billion. And for 7-Eleven, so you would be thinking slightly less, but not by that much, but it was like 2 billion. So the company is selling, like Couche-Tard shows slightly higher sales than 7-Eleven, but double the profit, which is, again, very interesting. So you can see that there are a lot of potential to increase the sales and increase the profit from the 7-Eleven business model using the Circle K playbook, which I like a lot. Now, we are at the beginning of this, and at the time of recording, I'm recording this before the market opens on Monday. So even though you're going to listen to that on Tuesday, I was like really going into it like right after my morning run. I was like, I need to pull out those numbers. I need to look at the transaction before I start my day. It's exciting news. It's going to be very exciting to follow what's going to happen with this. My thought is probably that the stock price will go down a little bit for Couche-Tard, which is usually what happens when the on the buyer side, which could be a good opportunity to grab some shares. Actually, the last time it happened, the stock price dropped by like about 10% on the news of Carrefour, and I load up the trunk, and that was a pretty solid move. I'm not telling you what to do. I don't know what's going to happen next. So that's not financial advice, my friend. You know that, right? But you have to do your due diligence. You have to take control of that. I'm not adding more to my position because it's already almost 10% of my portfolio. So it is very nice where it is in my portfolio. I'm just super happy to follow that news. It's going to be more exciting than a Netflix show, in my opinion. So I'm just really looking forward to it. At this stage, don't go crazy. That's just the news. And of course, the media is going to spin that off like the spin wheel doctors. So the spin doctors, I mean, like old reference to the 90s. So yeah, I always like to follow a business that just applies the same playbook over and over again. So for that reason, I think that Couche-Tard is making the right move because I will trust their experience and their expertise. The other thing that I like is, first glance, there's a lot of optimization that can be done for 7-Eleven using the Circle K playbook. They have been doing that every single time they buy large chains, and I'm sure it's going to be the same thing this time again. And the numbers are telling me that yes, they can increase their sales per stores, and they can definitely improve their profit. So the two things here, there's definitely synergy here, and those are like great indication, great starters when you are about to make an acquisition. Now, I had like a question from one of my member, Alain. So hello, Alain. Thank you for your question. He was asking about like, are you concerned that the fact that some management, some people on the management team at Couche-Tard sold their shares not too long ago, and now Couche-Tard's after a major acquisition? And I would say it's probably not even related. And first, they are like followed to the dot. They have to, like, most of those sales are planned way ahead of events because they cannot play around with the market and market news. That's the first thing. The second thing is, we don't know their situation. I mean, imagine that I work at Couche-Tard and I have like for like $10 million worth of shares, and I want to buy myself a nice vacation property in an island, and it costs like $1.5 million. Maybe I'm going to just decide to sell for $1.5 million worth of shares. And it has nothing to do with the business I run. It has everything to do with the fact that I want that vacation property on an island. That's pretty much it, right? So sometimes do not dig too much because you're not going to find like super information there. You're just going to create more noise and it's going to be harder for you to picture it. I rather go down, see the numbers, look at, does it make sense for Couche-Tard? Is it in their habits? Yes, it is exactly the type of play they make usually. And this type of play, they're really good at it. I see that there's synergies there. I see that there's a lot of improvement to be made. But I mean, we are a long way from a closed deal. So nothing's going to happen tomorrow morning. Don't go crazy about it. But just follow that story as a very entertaining Netflix show. So that's the word of the day. I just love Couche-Tard, my friend. All right, Moose, we're going to keep talking about investing this week. So don't forget to stay invested and stay tuned for the next episode. Cheers. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.